Hello, and welcome to the Planning for Retirement video for the Shared Risk Plan for CUPE employees of New Brunswick Hospitals, or CUPE Hospitals SRP. This video is designed for members of the CUPE Hospitals SRP who are thinking about retirement and are wondering what steps need to be taken to start the process, along with potential factors that should be kept in mind that can impact their pension. That being said, it is never too early for members to start planning for their retirement. This presentation is for information purposes only, and no rights are conferred by this presentation. The CUPE Hospitals SRP Plan Text and Funding Policy, the Pension Benefits Act of New Brunswick, and the Income Tax Act of Canada supersede this presentation where discrepancies may occur. For authoritative wording regarding this pension plan, please refer to the CUPE Hospitals SRP Plan Text. Today's presentation will cover a number of different topics. These include how your CUPE Hospitals SRP pension is calculated, resources to calculate pension estimates, which include your annual employee statement of pension benefits and the online pension estimate calculator tool, things to consider prior to starting your CUPE Hospitals SRP pension, and actually starting your pension. Let's first look at how the CUPE Hospitals SRP pension is calculated. When calculating the pension benefit, one of the major factors which comes into play is whether pensionable service falls before or after July 1st, 2012. This date is important as this is the date the pension plan was converted to a shared risk plan. As such, the pension formula rules differ significantly depending on whether the service was accumulated before or after the July 1st, 2012 date. Let's take a closer look. This slide provides the formulas used to calculate your lifetime pension benefit. Essentially, your pensionable service and best 5-year average salary up to July 1st, 2012 is multiplied by the applicable benefit accrual rates to determine the pension benefit before July 1st, 2012. For pensionable service on and after July 1st, 2012, earnings and service are used each year to determine the pension benefit earned for that particular year. All components of a lifetime pension are subject to cost of living adjustments and early or late retirement factors as applicable. We'll examine these items more closely momentarily. Another valuable component of the CUPE Hospitals SRP is the bridge benefit. This benefit is payable if you retire prior to age 65 until you reach age 65 and is in addition to the lifetime pension described in the previous slide. The monthly bridge benefit is calculated by multiplying $18 times the years of service prior to July 1st, 2012, plus $18 times the years of plan membership on and after July 1st, 2012. This simply means that if you worked less than full-time while contributing to the plan after July 1st, 2012, you still get the full bridge benefit for that period. It's also important to note that the bridge benefit is also subject to cost of living increases, but is not subject to any early retirement reduction factors, which we will cover shortly. Another important component of the CUPE Hospitals SRP pension benefit calculation is what are referred to as step increases. Each year, the CUPE Hospitals SRP Board of Trustees reviews the actuarial results of the plan, as reported by the plan's actuary, and determines whether the plan is able to provide the step increases as detailed in the plan's funding policy. If the financial position of the plan allows for it, the plan's Board of Trustees may approve step increases in the order laid out in the funding policy. It's important to note that the calculation of a step increase will never result in your pension benefit being reduced. While we won't go into detail regarding all of the applicable step increases during this video, the first and most consistently applied step increase, which is payable to all members, are cost of living adjustments, or COLA. These increases are meant to help your pension keep up with inflation. These adjustments are applied on January 1st of each year when the plan is in a financial position to do so. They are based on the change in the average consumer price index year over year, as provided by Statistics Canada. It's also important to note that if the Board of Trustees cannot award all or a portion of COLA in a given year, the missed COLA can be awarded in future years when the plan is in the funded position to do so. Details regarding how COLA is calculated are available on the plan's website. Look for the Cost of Living Adjustment section at qph.ca, in addition to the plan's annual fall newsletters. The final major component, which impacts what you will receive at retirement, is based on whether or not you begin receiving your pension before or after age 65, which is referred to as the normal retirement date. If you retire before age 65, permanent early retirement reductions apply to the lifetime portion of your pension and are applied differently based on the portion of pensionable service you earned before and after July 1st, 2012. The first arrow on this slide shows the reduction that would be applied to all service prior to July 1st, 2012. This is a permanent reduction of 0.3% per month that your pension begins prior to age 60. The second arrow details the permanent reduction that would be applied to all service on or after July 1st, 2012, which is a 0.5% reduction per month that your pension begins prior to age 65. So, for example, if you retire at age 59, a 3% reduction would be applied to the portion of the lifetime pension benefit for service prior to July 1st, 2012, while a 30% reduction would be applied to the lifetime portion of the pension benefit for service on and after July 1st, 2012. Furthermore, if you decide to keep working past age 65, a late retirement factor of 0.6% per month is applied to your entire pension when you retire. Please note, however, that once you stop working past age 65, you are required to start your pension the following month. In addition, the Income Tax Act regulations require all pension contributors in Canada to start their pension no later than the end of the year they turn age 71. You can continue to work and be paid by your employer. You just need to start drawing your pension at this point. So, in summary, your CUPE Hospitals SRP pension benefit consists of the lifetime pension benefit, the bridge benefit if you retire prior to age 65, step increases, which consists of COLA and other potential increases, and any applicable early retirement reduction factors or late retirement factors based on your age when you retire. As you can see, these formulas can be quite complex and extremely difficult, if not impossible, for members to calculate on their own. Fortunately, there are resources available which can assist you in determining accurate pension estimates so that you can have a sense of what you can expect to receive at retirement. The next portion of this video will address these tools. The first resource that is available related to your accumulated pension benefit is the Employee Statement of Pension Benefits. This document, which is provided to plan members on an annual basis, provides important information related to the pension benefits earned to the statement end period. This includes identifying the earliest date that you can retire with a reduced pension, your normal retirement date, along with pension estimates based on these dates with service earned up to the statement end period. Another important element of the Employee Statement of Pension Benefits is that it includes an online calculator tool benefit information section. You can take the information provided within this section of the statement and enter it within the online calculator tool available on VESCOR's website at vescor.org/calculators. Note that there's also a video on that website that provides instructions on how to use the calculator. You can then calculate endless pension estimate scenarios, which can include projected service and earnings. These estimates can be saved in an easy to read PDF format and printed for future reference. Please note that if you don't have a copy of your employee statement handy, you can always contact Vescor, the pension plan's day to day pension administrator, to obtain a copy. So, now that you have a general sense of what you can expect to receive at retirement, what are some other things to take into consideration prior to moving ahead with your retirement? If you would like to increase the pension you would receive at retirement, one option may be to increase the amount of pensionable service you have under the plan. This can potentially be done by purchasing service or transferring specified funds. Please note that these applications are only eligible while you're an active contributor to the plan. That means that once you stop working or begin receiving your pension, it is too late to apply to purchase or transfer service. It also usually becomes more expensive to purchase or transfer service the further you are in your career. So if you think you might be interested in these options, it's better to apply sooner rather than later. If you've had any previously refunded service, authorized leaves without pay, or waiting periods, you may be able to purchase these periods and receive additional pensionable service, which would increase your pension at retirement. Similarly, if you have previously contributed to the pension plan for part-time and seasonal employees of the province of New Brunswick, you can apply to transfer these funds to the CUPE Hospitals SRP and be credited with additional service under the plan. Applications for both of these processes can be found on the cupeh.ca website. Another important consideration that you should keep in mind regarding your CUPE Hospital's SRP pension is who you would want any survivor benefit to go to if you were to die prior to retirement. It's important to note that the individual who would be entitled to any survivor benefit prior to retirement would be your spouse. That being said, your spouse can waive their entitlement to the survivor benefit, allowing all or a portion of it to be paid to somebody else if the applicable form under the New Brunswick Pension Benefits Act, called the PBA Form 9, were signed prior to your death. If you don't have a spouse, or if the PBA Form 9 waiver is signed by your spouse, you have the option to designate one or more beneficiaries to be entitled to the survivor benefit. Even if you do have a spouse and the PBA Form 9 is not signed, it's still a good idea to designate a beneficiary or beneficiaries if you have someone you would want to leave your survivor benefit to in the unfortunate event that both you and your spouse were to pass away. Designation or change of beneficiary forms can be found at the qph.ca website. Finally, if you don't have a spouse entitled to the benefit or have any designated beneficiaries, the pre-retirement death benefit would be payable to your estate. Once again, these rules are if you die prior to retirement. We'll look at survivor benefit options once you begin receipt of your pension in a few moments. One very important thing to note is that if you were previously married and are now separated, you should contact Vescor to review your situation, as your former spouse may still be the person entitled to any survivor benefits, depending on whether you are legally divorced from that individual, have undergone a marriage breakdown payout, or have a valid domestic contract, such as a separation agreement or court order, which addresses the pension entitlement. Now that you know how the CUPE Hospital's SRP pension is calculated, you've run some pension estimates using the online calculator tool, and you've looked at options such as purchasing service to increase your pensionable service, you are now seriously considering retiring. What steps should you take next? If you are within 1 year of your expected retirement date, you should either request a formal pension estimate directly from Vescor or have your HR department forward the request to Vescor. We'll review the difference between formal pension estimates and those calculated using the online calculator tool momentarily. Please note that formal pension estimate requests can take up to 6 weeks to process. Once you receive your formal pension estimate and have decided that you indeed want to retire, The next step you should take is to meet with your human resources officer in order to complete termination papers and apply for your pension. This would ideally take place 6 months before your retirement date. In order to ensure you don't experience any delays in starting your pension, you should also think about gathering documentation that will be required prior to starting your pension. These include your proof of date of birth. If you have a spouse, their proof of date of birth and documentation which confirms your married or common law status. If you're separated from your spouse, any documents which detail how the pension is to be treated. And other documents which include void checks or a completed direct deposit form so that your monthly pension payments can be transferred securely to your bank account on a monthly basis. Don't worry, your employer and Vescor will provide you with the list of documents you need when you're completing your termination papers. The documentation that you will receive from Vescor once your termination papers are submitted will include what is called a preliminary retirement statement, which is essentially laid out in the same format as a formal pension estimate. As you can see on these images, you will be provided a number of different monthly pension amounts based on your termination and retirement date. This is due to the fact that you have different forms of pensions that you can choose from, which result in different benefits payable upon your death after you have started your pension. There are two main types of pensions available under the CUPE Hospitals SRP: life pension guarantees and joint and survivor pensions. Let's take a closer look. Life pension guarantees are available for either 5 or 10-year periods under the plan. What this means is that while the pension is payable for your lifetime, if you were to pass away prior to the end of the guarantee period, the remaining payments during the guarantee period, excluding any bridge benefit, would be payable to your designated beneficiary or beneficiaries, or to your estate in a lump sum if there was no designated beneficiary. So, for example, if you selected a 5-year lifetime pension guarantee at retirement and died after receiving your pension for 4 years, the remaining year of lifetime pension under the guarantee period would be paid to your designated beneficiary. Another example would be if you once again selected a 5-year life pension guarantee at retirement, but died after receiving your pension for 6 years. In this case, the guarantee period would have ended prior to your death, and there would be no further benefit payable from the plan. It should be noted that if you have a spouse and wish to select a life pension guarantee form, your spouse will have to sign a New Brunswick Pension Benefits Act Form 5. By this form being signed, this allows any survivor benefit to be paid to your designated beneficiary, which, to be clear, you can designate your spouse as the beneficiary. The other type of pension that may be available at retirement is a joint and survivor pension. These forms of pension, which are only available to members who have a spouse at the date of their retirement, provide for pension that is paid not only for your lifetime, but also the lifetime of your spouse following your death if they are still alive at that time. The percentage of the survivor benefit that would be payable to your spouse upon your death can be 60%, 75%, or 100% of the lifetime benefit, excluding any bridge benefit, and would be selected at the time of your retirement. So now that we know what the different forms of pension are, let's revisit the layout of the preliminary retirement statement. As shown on these slides, when you request a certain retirement date, the different forms of pensions are listed, along with the dates that the pension amounts would change, either as a result of a guarantee period or a bridge benefit ending. You'll also note that the amounts differ based on the form of pension. The general rule of thumb is that if the survivor benefit is more generous, the pension payable to you upfront decreases to account for this trade-off. It should be noted that all forms of pension are actuarially equivalent. This means that the total value of the benefits payable to you and any applicable survivor are equal when compared. That being said, your personal circumstances, including your marital status, age, health, etc., will often determine what form of pension is best for you. Once all your signed pension papers are submitted to VESCOR, congratulations! You will now be a CUPE Hospitals SRP retiree. Your CUPE Hospitals SRP pension is payable the first of every month once you begin your pension. And the last pension payment payable to you is the month of your death. It's important to note that the earliest you can start your pension is the month after you stop working. So, a tip to consider is that you may want to stop working at the end of a month so that you don't have any large gaps between your last day of work and your first pension check. Once you become a CUPE Hospitals SRP retiree and begin receiving your pension, rest assured that you will still be kept in the loop regarding your pension plan with CUPE Hospitals SRP newsletters that will automatically be mailed to you on a semi-annual basis. These newsletters include useful information about the plan, which include financial and actuarial results, details about any cost of living increases that are awarded, and any changes to the pension plan. In addition, you can find other information anytime by visiting the plan's website at qph.ca. Copies of previous newsletters are available there, in addition to your plan's member booklet, helpful videos, application forms, and more. That concludes the CUPE Hospitals SRP Planning for Retirement presentation. If you have any questions regarding the information that's been provided in this video, or if you have any other CUPE Hospitals SRP pension-related questions, VESCOR's Member Services team is available and happy to assist with these inquiries. You can reach them using the contact information provided on the screen.